take on the real estate market in Toronto specifically?
I think, obviously, not enough supply when it comes to more detached homes. I think in the Toronto condo space for apartments and stuff, I feel like we're oversaturated. But, some people, it's funny because I was talking to a couple private lenders, and they said that they were kind of scaling back in the condo market of Toronto.
So are there any particular neighborhood or types of properties you see as undervalued or overvalued?
Condos are currently overvalued. I think, or they were.
I think they still are.
I think they still a little bit are.
They still are.
What we're seeing, obviously, and this is for anybody who's listening or watching, is that if you purchase a place back in 2020 or 2021, it's not looking good, especially if it was a new construction property and you bought it at its peak, because there's a potential of the values of those properties declining. So what happens in those situations is a couple things. If you're somebody who's putting 20% down and you are hoping that the value is supported, if the lending institution, whether it's the banks or the non-banks, and they require a appraisal report for whatever reason, maybe because they also have concerns with the marketability in that area. If that appraisal comes in less than the purchase price of what you bought it for, you have to come up with a difference in costs. That's in addition to your down payment. I have seen even scenarios where a client had to come up with almost $89,000 of a difference. And that was a property that was purchased.
We're discussing a case that the client had to come up with $140,000.
Exactly, right? We just had one. This was in downtown Toronto, right? But, when we look at it, he bought it at his peak. But at the same time, I think I would have looked at this and said, this was not a good deal, even being on the mortgage side. I'm like, it's a condo that was less than 500 square foot. It's like 479 being pre-construction. Right, was it for almost 800,000?
Almost 800,000.
That
there are people who bought like 2020, 2021 pre-construction. The problem is that the cost of construction has gone up. Exactly. Land values have gone up a lot. Yeah. Right. But like the market doesn't support it, unfortunately. Yeah. So the builder won't be able to build otherwise. I mean, like if they don't sell at that price, they're not able to build. Yeah. But then at the resale market, in the resale market, you are not able to sell it for as much. So I don't know how we're going to solve that problem.
I think it's going to be a tough one, especially with those properties, where those, especially micro condos. If we see a lot of that, those are going to take a really huge hit for it. I think, that's something anybody has to be aware about. Even if it's a pre-construction of a detached home, you got to keep in mind, if you thought that the values were increasing, let's say you bought in Kitchener-Waterloo, right? You bought it at its peak. Things you got to be careful about, is that if an appraisal is required and you're putting more than 20% down, if that lender needs an appraisal done, be prepared to have those additional funds and on top of your down payment. Now, there are ways, obviously, for individuals who are putting less than 20% down. If you're buying a pre-construction, or just in general, putting down less than 20% down, and say you're buying less than $1 million. Pre-construction, now you can qualify with 30-year amortization, yes. With the other one, for resales, you can only do 25-year amortization. But when we're dealing with the mortgage insurance companies, such as everybody probably knows who CMHC is, but there's also two other mortgage insurers, Sagen and also Canada Guarantee. With any of these three mortgage insurers, if you're putting less than 20% down and you qualify for that insured mortgage, meaning the threshold below $1 million, there's no appraisal that is required. The only time the mortgage insurers would ever ask for an appraisal is if they didn't have enough statistics on the community or the area where the clients are purchasing somewhere in Timbuktu, right? But in most situations, they'll support it. And that's one tip, is if you're willing to pay insurance premiums, we've done it in such situations at times, where clients that are putting less than 20% down, they have benefited from it, and they would speak to another tenant or another potential buyer in their area, and their buyer is like, well, I put more than 20% down. They want an appraisal on it, right? And then that kind of screwed one client over,
but just to be clear, those mortgage insurances cover the lender, protect the lender, not the borrower.
Yeah.
Right?
So mortgage default insurance with those three insurers that I mentioned, they are there to protect the lending institution should you ever default on the mortgage, right? You pay it, it gets added onto your mortgage, you're still qualifying with it, right? That's something you got to keep in mind. Now, the percentages all depend on how much down payment you're putting. If you're putting 5% down, it's higher. If you're putting 10, 15, or 19% or 19.99%, whatever it is, because when you're putting less than 20% down, you're typically getting the best interest rates in the market, okay? Because the way it's positioned is that these are considered high-risk borrowers. So because they're paying for the mortgage insurance, we're going to do them a favor and also give them the lowest interest rates in the market. But with regulatory changes that happened in 2016, the government and the regulator OSFI had decided to make some changes saying that any properties that were over $1 million or 999,999, those properties and that were over $1 million, or if a client wanted a 30-year amortization, they would not be covered by insurance, right? So some might say, okay, well, what if the property is putting more than 20% down, but I qualify with 25-year AM and the value is less than $1 million? Those are called back-end insured mortgages. You're not paying the insurance. The lending institution is typically paying for it. The only time you're paying for that mortgage default insurance is when you're putting less than 20% down. Mm-hmm. But once you start tapping into a 30-year amortization mortgage or buying something over $1 million, those are uninsurable mortgages. There's nothing to protect the lending institution. And when that regulation happened, the lending institution said, well, these are now high risk to us because if these clients default, we have no way of recovering our money. Yes, it's a low risk in the consumer's eye because we're saying we're putting 20% down. What do you mean? That's equity. It's equity there, but
they put a lien on the property, so they basically sell the property.
The way is, as an investor, if you're a lender, you're looking for your return of investment. So let's say, for example, great, somebody put 20% down, but they have an $800,000 mortgage. They default. They're not going to get their money back because they're still out. Say the client defaults a month after, they're maybe still owing $800,000, right? So what insurance is going to cover that $800,000? The client could sell the entire property if they want to, right? But those are things you got to look at, is that there's no insurance protection for the lender when they go that direction, which is why typically those that are putting more than 20% down, 30-year amortization, interest rates are a little bit higher, not crazy much higher. They could be maybe anywhere from a 10 basis points to a 15 basis points difference. All depends. But every institution is going to be different. But that's something I think even borrowers should be aware about, and asking themselves that question: how come this person got a much of a lower rate, but this person didn't? Or why is this mortgage renewal much lower and this person didn't? Because lenders base it based on tiered systems, how that mortgage was structured, who that investor was potentially. If it was a non-bank, that's what they're looking at to determine who qualifies for what. And they're also looking at your repayment history and credit history as well. They're not maybe pulling your credit, but they'll do a soft check versus a hard check on your credit. And they'll say, should we have any concerns about this client of offering a renewal, or how are we going to price their mortgage and what type of renewal rates are we going to give them?
I see. I really appreciate all the tips and insights that you've been giving me and the audience who've been watching the videos. I'm going to have a couple of final questions that I'm going to ask. Okay. What's the best piece of advice you've ever received in your career?
So many. I would say the best advice is only worry about what you're doing. Don't worry about the outside noise, right? I think that is always a big thing for me. It was, when you worry so much about what everybody else is doing and then now
focus on yourself.
Focus on yourself, right?
Yeah,
because
what you're doing,
what you're doing is for yourself. You're not doing it for everybody else. People are there going to watch. They're going to have an opinion, this and that, but they're not living you day in, day out. They're not, doing everything you're doing. They're not seeing everything you do. They're not going through the same struggles. Everybody has their own journey, their own path, and that's why for me, I focus so much more on what am I doing? I don't focus so much on what everybody thinks
your competitors are doing.
Exactly. And people will say, well, there's competition. I said, I don't focus so much on what the competition's doing. What I focus on, what can I do best? What can my team do best? And, or when people say we're competing against the banks or competing against that, yes, there is healthy competition. But if that's always stuck in your head, you're never going to be able to move forward, because you eventually have to come to one point and say, what is my value? Because I talked to you guys about this. I'm like, what is your value proposition? What makes you different than another broker? What makes you different than a mortgage specialist at a bank, right? Like,
how do you think this advice has shaped your approach to business and client relationship?
I would say by getting that advice and how I approach it is I think I've become more open to. It allows me to be more open to focus on them, like they're the only person that matters, right? I'm not trying to. Yeah, I would say that advice has really helped. Let's do this question again.
Yeah. Okay. How has that advice shaped your approach to business and the client relationship?
It allows me to focus on the end goal and results for the client, not having to worry, because I focus on building a value to my clients by saying, okay, this is what I can provide to you. And I will educate them on it, and things saying, okay, if you're going to work with this mortgage broker or work with that mortgage specialist, make sure you ask them all these questions. And it has gotten to that point. Sometimes a client will say, oh, I went to go ask them, they had no idea. And then they come back to me, right? The client will say, well, I heard this in the media and heard that in the media. And then once you start talking more about it, that's just what I mean. Like, don't focus so much on the outside voice, right? That kind of has helped me along the way of really dealing with relationships with clients, with our agents, with my business partner, right? We try not to focus on what everybody else is doing. We try to focus more on what can we do and how do we grow and scale, and doing what we do best, right? So,
I see. If you could change one thing about the mortgage industry, what would it be and why?
Probably have less mortgage brokers in the
really?
broker
is
space.
That one, yeah, okay.
Yeah,
why is that?
I think when we look at, I think there was an uptake. So with full transparency, when the COVID happened, there was an uptake, obviously, in realtors. There was an uptake in mortgage brokers, right? People sometimes come in for the short-term gain, not the long-term. And any mortgage broker that comes in, or real estate, I think at the end of the day, you have to remember that these are people's livelihoods that you're dealing with, right? If you're coming
it's a business that it looks very easy from the outside, and when people actually get into it and get involved, they realize, it's actually not as simple as they thought it would be.
Exactly, right? And it's not what you thought it would be, right? If I were to ask you, did you think being a mortgage agent was what you thought it would be?
Absolutely not. No, it's a lot more difficult.
It's
right?
more complex than you think, and it's crazy, because this is where you need to invest your time, because if you're not always in the know of what's going on in the market, what's going on in business, how are you going to deliver those results to your client? And I think obviously with you have to keep up to date with the market. You're obviously showing houses and looking at that and being on the real estate side of things. Now you're tapping into the mortgage place, which is you're learning not just general guidelines. You got to know who your competition is from lenders, why you're going to this lender, why you're not, how are you going to cross sell, not sell them against another lender if they're with somebody already. Or if they're working with another broker, you got to say, okay, one, what have you accomplished so far with that broker? Have they pulled credit? Have they done, and sometimes clients need double advice. Some brokers might say, well, if a client's working with me, no other broker should poach me or poach that client. I believe if you can't do the job right the first time and you can't retain that client, I do believe it's a free for all. At the end of the day, everybody has a different sense of knowledge and advice, and it comes down to comfort. If your client needs to get advice from two different brokers, they're entitled to it. Nobody owns that client, right?
I know.
And I always look at that. People will say, well, that's my client. I'm like, but you don't own that client.
Own people, yeah.
Yeah, that client chooses who they want to work with. Right? And it's based on their experience with you,
But in the real estate world, it's different, right? You sign a buyer representation agreement, so you technically own that client.
Yes, real estate is a bit different. Mortgages,
but I still don't hold people hostage, right?
Yeah.
If somebody even has a contract with me and they're not comfortable for any reason, they don't want to work with me, I never force anybody or enforce that contract. Right?
There are
cancel right away. I'm like, go work with somebody, you know, would work better for you or has your interest.
Yeah. There are, now don't get me wrong, there are some mortgage brokers who will get clients to sign like a letter of intent of working with them and whatnot, but it still also doesn't hold much value.
No.
Right? And that's something because it's not something that was created for the industry. These are mortgage brokerages. So I think if you're signing, like, I think why mortgage brokers do it is that obviously they want to ensure that the client is serious about working with them. Right? For me, when I know a client's going to be working with me, is when they send me all the documents. I'm a big believer, get all the documents up front, because by getting the documents up front,
and that's very good advice.
Yeah,
I get that.
Yeah, less stress on the client's end, less stress on the realtor's end. By selling data and saying, like, I have majority of the documents, we should be good. Maybe there's 2 or 3 more things that we might need later on. Right? The biggest mistake I see with a lot of mortgage brokers is they're so focused on getting the approval. Documents come in, file collapses because nothing matches up. Income doesn't match up. This doesn't match up. You know, what the client thought they could do or what they told you about this is actually not what could be used, or they, you know, not looking at their income taxes if you're self-employed, right? Sometimes you have different multiple sources.
That's one of the best advices you've ever given me, and I implemented that into my business, and it made everybody's life easier, right?
Exactly.
Client's life, my life, your life.
Getting that tax return, right? Because I think people sometimes they'll say sometimes mortgage brokers will just send me the notice of assessment. But in dealing with a good A lender, a prime lender, or that, they're going to ask for more than notice of assessments. They're going to ask for the T1 generals. And when they see that breakdown, if there's income that they can't use, guess what? That deal's collapsing. So that's why I always push it with every agent that joins us, is saying, hey, get those documents, because this is what you're going to need to look at. And you're going to understand eventually why I'm asking for it, because it's going to break it down and you're going to say, okay. Right. So, that's what I would say.
Thank you, Patrick. Any final words that you want to?
Any final words? Look, I think the mortgage industry will continue to evolve. I think the real estate will continue to evolve. I do believe that maybe there might be some tightening when it comes to lender guidelines over time, especially with the way the market is. That is bound to happen. It can, but the one thing I know is that being in this industry is that the industry is very resilient. It's not always going to go the client's way, right? And also at the same time, there's going to be a lot more challenges coming our way. Like, for example, FinTrack, right? We know that's coming into the broker space. It's not going to be the same as the everyday real estate brokerage does it, but we might have a bit more different processes, and that's something we'll have to deal with. And I think, you know, there will be other security things coming in from, you know, whether it is Equifax reviewing employment, whether it's CRA verifications and all that type of stuff. And those things, can it happen anytime soon? I don't know, but I know that there's always been talks about all of this stuff. So it can be tougher and tougher to get a mortgage. But I'd say, again, consult with a mortgage broker. If you don't want to consult with one, consult with 2, right? Just get proper advice and make sure you interview the mortgage broker you're working with. Okay. Absolutely.
Interview your mortgage broker.
Exactly. All right. That's all I really have to say.
Thank you very much for your time, Patrick. I hope we can have more podcasts in the future and awesome. Benefit from your experience and knowledge.
Sounds good. Thanks for having me.
Thank you.
Thanks.
Have a good one.